Fewer Americans filed for jobless claims. That's according to numbers released Thursday morning from the Labor Department. Some 278,000 people applied for unemployment benefits for the week ending January 31st, compared to estimates of 290,000. So what does this mean for Friday's January jobs report? Here with analysis is Bob Johnson, Director of Economic Analysis at Morningstar, joining us from Chicago. And Bob, first off, your reaction to the jobless claims numbers this morning.
Sure. You've always got to be very careful with these. The weekly numbers, it's always best to look at a 4-week moving average, and those have been fairly stable at just under 300,000. Especially this time of year, it gets difficult to analyze them because there's holidays in there, and sometimes the claims get processed, sometimes they don't. So the numbers are really volatile, and the moving average has been trending up a little bit. Not horrifically so, but it's been trending up just a little bit, indicating that the labor market's a little bit softer than it was.
All right, so these numbers were better than expected, but Wednesday's ADP report wasn't as great as expected. So what does all this mean for tomorrow's big jobs report from the Bureau of Labor Statistics?
Well, you know, I've been worried about the report on Friday for some time, mainly because the fourth quarter was a relatively slower GDP growth quarter, yet it was one of our best quarters for employment growth. So that's been a little scary for some time, and so I've always been a little bit below consensus. People have been thinking 250,000 jobs, and I've been thinking more like 200,000 jobs will be added when we see the job report on Friday. There's a whole bunch of things that are in there. You know, other than looking at the raw employment numbers from the government, I also like to look at the Challenger Gray layoff report, which showed a big increase in layoffs. I look at the purchasing manager surveys, the employment subsectors. We had one of the biggest falls on record for the services sector. A small fall in the manufacturing sector, not so bad there. But in general, and you mentioned the ADP numbers were softer. So all of those point to a slower jobs number on Friday. The average over the last 12 months has been 238,000. I think we may come in at 200,000, and there's even an outside chance that it's a little less than that.
All right, now economists are also expecting a 0.3% rise in average hourly earnings, which is another data figure we'll get tomorrow morning. What's your take on the state of wage growth? Is that something we should see more of as the year progresses?
Absolutely. I've got a theory that we're going to have more labor market scarcities in the year ahead. You know, you've got more baby boomers retiring, and for a while they held off of retirement because their 401ks were underwater. Now they're retiring in droves. And I think we're going to be talking about labor scarcities by the middle of the year. In fact, we already are in things for like airline pilots and airport controllers and so forth. So there's a number of categories we're already seeing some shortages. So I would expect the wages to generally creep up as we see some of those scarcities and people can demand more wages. On the other hand, some of the faster growing sectors are some of the lower paying sectors. So it's going to be a little bit ahead to get very far ahead. But that said, be careful when you look at Friday's number. The month-to-month numbers are very, very volatile in terms of the earnings.
Right.
We tend to go for a couple of months with no growth, and then all of a sudden we'll have a 10-cent spike in 1 month. So you got to be a little careful. On the year-over-year data, we're at, say, about 1% or so. So not too far off.
All right, Bob, we'll leave it there. Bob Johnson, Director of Economic Analysis at Morningstar, joining us from Chicago. Bob, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.